Welcome to the Apartment Guys, where we dive deep into all things multifamily investing. Our mission is to educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate Seymour interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the Apartment Guy, Tate Seymour.
Welcome, everybody. And today is an awesome episode of the Apartment Guys. It's Dude Fest on the Apartment Guys. I have Mr. David Toupin on the show. And David's been on the short list of guests that I've wanted to have since day one. We're now on episode, I think, 63 or 64 here on the Apartment Guys. And it took me a few attempts to kind of get your attention, David. LinkedIn, Facebook, all that stuff. I finally was able to reach you and have you on the show. So welcome. I'm so glad you're here.
Yeah, man. Thanks for having me. Glad we could work it out.
Yeah. So we were talking a little bit before we started recording that David spoke at an event in Denver that I went to on finding deals about 3 years back. That for me personally was very foundational. The whole event. It was an event that Adam Adams put on, and a lot of speakers were there that are still part of my career today. Corey Peterson was there. Sterling White was there. He's been a good teacher for us, and just I'm going to forget some really great people, but David was there and was speaking specifically about underwriting and spreadsheets, and was very impressed with such a, I kind of is the obvious, right? Such a young guy with such a great presence and the ability to really deliver such powerful information in front of a group, but also to have the level of success that you had at that point. And that was 3 years ago. So, here we are 3 years later, and you're still crushing it. You're transforming, you're transforming the technology in the space as well. You're up to some really exciting stuff. So it's just awesome to have you. If you would just kind of maybe a little background. I know you're from Michigan, just outside of Detroit. But to help the listeners kind of understand a little bit about you and how you got to where you are right now.
Sure. Yeah. I'm going to have to do my best to live up to that intro you just gave me. But, no, dude, it was great meeting a couple of years ago, and what a fun event.
Yeah.
And a lot's happened since then. So just a little bit of background. I started investing in 2016. I was 19 years old. I was in college, doing some internships in like the investment banking space. And, I thought, like a lot of people, I thought you had to go get a high paying job. I wanted to do real estate, but I was like, man, I got to go get a high paying job, save some money, then invest. And then I figured out, well, you don't have to do that. So I thought really the next thing I was like, well, I want to do commercial real estate, but I've got to do single family first. And that was the next kind of limiting belief, and definitely broke through that mental barrier pretty quickly after I started hearing people on other podcasts like, oh, I went straight into doing apartments and it's worked out well. So I kind of flipped that. And then right by the end of 2016, I started hunting deals, talking to brokers and cold calling owners, and just trying to find a good deal. Like in my mind, it kind of made sense. Like without the deal, you have nothing else, right? So there's no sense in spending all my time making a website and business cards until I find a deal. So I went straight for the deal. And the biggest thing that stood out to me was that as a very financial business here in apartments. So I gravitated a lot towards the underwriting, and I used some of my skills I'd learned in investment banking to build out some Excel models. And that's what I used. I just underwrote tons and tons of deals and made a lot of offers. And my first property I bought, I was 20. It was my junior year of college, and I bought a 12 unit property. Since then, I've just kept acquiring multifamily deals. I have one commercial building, the rest are apartments, but I bought about 1,200 apartments since then in the past 6 years. And I have my software company, Real Estate Lab, as well, which is a multifamily software platform. So I'm a deal junkie. I can't get away from doing the deals, but I've also software has become a passion of mine as well.
Yeah. So yeah, you really combine like your superpower of underwriting and understanding spreadsheets and offering memorandums, et cetera, with your power of getting deals done, like sourcing deals, having the resources or finding the resources to get them done, partners, capital, et cetera. And you've taken those things and let's just talk about Real Estate Lab for a few minutes, because I'm so excited about it. You've taken all of your experience and knowledge and like your own needs as you've discovered them in the process and created this solution in Real Estate Lab. Talk a little bit about it. It's all about the acquisition process and what you have, like working what you have in the pipe, right? So talk a little bit about that.
So like I mentioned, I built those spreadsheets and people had started asking about them. They wanted to buy them. So I threw it up on my website for $250. And within like a year and a half, I'd sold $100,000 of a spreadsheet. And I'm like, okay, like there's definitely a demand for this in the industry. People want a good product that works, that helps them underwrite deals with some education along with it, because most people don't know how to go in and work spreadsheets, right? So you've got to make it user friendly. And in my mind, there's even a next level to that. It's like, okay, you can make a spreadsheet, you can only make it so user friendly, but you can't really have all these other features incorporated in with it, right? So I wanted people to be able to manage their entire pipeline of deals they're looking at, almost in a CRM type form, but then be able to do all these other things like create LOIs, get financing online. And so I have all these other ideas and I'm like, man, the best way to do this is going to be to build a software platform. So, I spent like 60 grand with this first software company and they created a product that was just like a total mess. It didn't even work. I was like, this is awful. And so I basically flushed $60,000 down the toilet, went back to the drawing board, started actually studying the industry. An industry I knew pretty much nothing about was the software business and SaaS companies. And I interviewed a bunch of companies and I settled on one that was really solid out of San Diego, who I've been with for about a year and a half now. And they've built this product, this vision that I had. We've built it, and it basically helps you, manage the entire acquisitions process, underwrite your deals online. You can create LOIs online. You can upload a rent roll in Excel. It'll read it, pull out the unit mix, put it into the underwriting model for you. You can upload a T12. Yeah, you can upload a T12. It'll read it, put it into a standardized format, pull out the junk, and then it'll put it into the underwriting for you. And the goal is within a year or so, really get to a point where somebody can upload a deal that they're trying to underwrite and plug in a couple things, and we'll basically fill it out for you and say like, hey, I see you're underwriting a 70s 200 plus unit deal in Salt Lake City. We, based on our data, we suggest to use these operating expenses. And these are the financing terms that you could, you'll most likely see. Here's where your property taxes are going to most likely go to when you're done. So we want to solve this underwriting process because it's the most important part of this business. You can't buy a deal without knowing the numbers. You need to know the numbers, but most people hate it. Most people don't like running numbers and analyzing. They're not analytical. So, I want to give that superpower to everybody through the use of software.
That's awesome. And this is I know you're beta testing it now. And what's your release target on this?
Yeah, we're releasing. So it's in beta right now. We have a bunch of users testing it. It's a working product. It's coming to market by end of 2021, probably November. It has a lot of the features I just mentioned. It doesn't have all of them, but obviously as we grow, it's going to continue adding more and more on.
Cool. Yeah. So, you've been nice enough to offer us the beta version. We're definitely going to dig in. We're so busy. It's kind of like forest for the trees over here. Like we're so busy doing deals. It's really hard to get help doing deals. Like we're hiring an asset manager and due diligence specialist, and hopefully going to be leveraging some of that there, but having I'm a big believer in technology in general. I mean, kind of goes without saying in this business, but like whether it's the Monday.coms or the Trellos or these project management type software that give you like the 30,000 foot view of everything you've got going on, and then gives you the ability to deep dive vertically into each deal, each set of expenses. Because look, you could, if you're wrong by 25, 30, 40% on your taxes, for instance, that could throw the whole deal. Like
kill the deal, man.
Everything.
I've done that before. That's how I learned it the hard way.
Right. There's tons of numbers in these spreadsheets, obviously. And some of them are more important than others. I mean, it's like some of them are levers that are very powerful. And if you really need to get them right. And, this is going to be fantastic for people. I think especially those of you that are kind of newer in this space and are advancing into the space right now. I would put November 2021 on your calendar. Make sure that you're in line to get this acquisition platform from David, because I think it's going to be fantastic. It's obvious. You said it's obviously all web based.
It's all web based. Yep.
Yeah. That's so good. That's so cool. Good for you, dude. Thanks,
man.
That's
I'm
awesome.
excited. Been a long time coming on that, just turning the vision into reality. So definitely want to make an impact in the industry. Yeah.
Well, I know your spreadsheet is definitely one of those that when I am talking to different capital sources and other syndicators and whatnot, we're always comparing notes and talking about different deal analyzers, and the David Toupin model comes up a lot. We definitely see it out there. So,
cool.
So yeah, man. So you've shifted a little bit in your approach towards deals over the last 6 months, year or so, maybe.
A year or so.
Yeah. So first of all, just to back up, your deal first perspective, or your kind of how you led with getting a deal and getting it under contract, and then that's like a man after my own heart kind of approach. It's a lot of people kind of call it the ready, fire, aim approach, where you basically go out and get the deal and then figure out everything else you got to figure out to get it done. And you got to have a fair amount of resourcefulness and confidence in your resourcefulness, and of course you have to have the specialized knowledge and credibility to raise the resources necessary to do those deals. But I am a believer, and people will disagree with me, and I love and respect some of them that do, but I'm just kind of a deal first guy. We've created a deal finding machine at Greenlight. Our investor relations and capital raising is a big part of our business now, but wasn't a big part of our initial version of Greenlight. Let's put it that way. So, and then, we've kind of been on the same page up until recently about we're going after, we just closed on a 51 unit, but that's kind of an exception. So for us, we're looking at at least 80 plus, ideally 100 plus units. And the bigger, the better from our perspective. So I've heard you recently speak on other podcasts about kind of a shift in your own perspective around this. And it was enlightening for me to hear you talk about it, and definitely kind of shifted my perspective a little bit too. So talk about a little bit about that, and about, I know, when 3 years ago, you were a big unit count guy, right? Yeah,
definitely. Yeah. I think, the transition is just like really based on what I've seen in the 12 or so deals I've done, and a lot of those I've done about 7, maybe 8 now, full cycle. And so I've realized a couple things, right? Unit count does not really at all to the amount of profits you make as a sponsor. It's how you structure the deal. And so when I realized that, that I, could make more money and build more wealth on a 20 unit than I can on a 200 unit deal. All right. I'm not saying that all be all, but in the scenarios that I've been put in, it's hard to eliminate doing those type of deals, right? I can't just say I'm only doing 100 plus, because I've had deals that are under 40 units that have made me 7 figures in under a 2-year period flipping them. And I'm like, man, if that's the case, I need to keep doing these type of deals. So, and I've had deals that are, 200, 170, 180, 200 units that I've taken full cycle and sold. And, everybody made a really good return, but for my sweat equity, I made, 150 or $200,000 because I had to bring in all these other people to get the deal done.
Yeah.
And so when I'm weighing that, and I'm just strictly looking at, right, obviously take into account in both scenarios, the investors are going to be making good money, but take into account that what I'm making on a per deal basis, I can structure smaller deals a little bit better, a little bit stronger in my favor, to where I can earn more, essentially. I've done deals with private equity. When private equity gets involved, your GP goes like this, and it gets smaller, and smaller and smaller, and that's not a problem, right? You do a really big deal, that could still end up being a big chunk, but I'm interested in balance sheet, not unit count. So I don't do deals unless my equity in that deal is at least $500,000. That's kind of like my minimum. 400 to 500,000 on the low end has to be my projected ending equity in the deal. And then there's got to be, if it's not a flip where I'm going to turn it and flip it in a year and hit that $500,000 mark, personally, then I need to be making X amount of cash flow on the deal, and that's kind of deal dependent. So I just look at them differently, right? Because I'm really looking to continue scaling. And one of my goals is every year I strive to double my net worth. And so, if I'm not doing deals that relate to that, then, I'm not doing it right. And this may transition. And the way I kind of see it going is over the next couple of years, doing maybe mid-sized, smaller deals where I'm a larger owner, 50% or more owner. I'm putting a lot of my money into these deals now. Sometimes I'm the sole owner, transitioning back towards doing larger and larger deals, but when it's at a time where I can be one of the primary investors in the deal, and own a majority of it. So that's kind of what I'm looking to do. It starts off different. You start off make, very small amounts, but like as you get more leverage, more control over the deal in the end, you can structure them a little differently. Yeah.
Look, partners are expensive, and LP money is obviously expensive, and so I love this balance sheet first approach versus unit count, because I've been a unit count guy, and that's kind of that's the metric I've been shooting for. And it is interesting to watch how it translates as your portfolio develops. Your unit count goes up, and sometimes your net worth goes up a lot, and sometimes it doesn't go up very much at all, compared to your unit count, or in relation to your unit count. So that's very like kind of eye-opening for me, because I've just been like nose to the grindstone, get the biggest deals that we can get under contract. And we've got a great KP that gives us the ability to borrow awesome. Up to 30 million.
Tons of money.
Roughly. And so we've got that in place, and we've, in these 2 markets that we shop in, Columbus and in Oklahoma City, we've got the infrastructure in place to really beef up the unit count. However, structure is everything. And the way that you structure, particularly the GP, is, really does determine your final outcome, and like you said, the amount of equity that you have in the deal. And it's good to know yourself and to know your requirements, it's cool that you have such specific parameters and metrics that you're looking to hit. So
I just know like how much time a deal takes, right? And I've done the small ones, I've done the big ones, and they take the same amount of time. And it's just like, if I'm going to put my time and effort into doing 5 to 6 deals a year, they've got to be certain types of deals, and they've either got to provide a really good long-term cash flow, a play where I can get my investors in, refinance them out, make them a good return, but then I own it, or it's something that I'm going to flip. And if I'm going to flip it, it better make, X amount of money at the end of it. So, yeah, I mean, it really is dependent on how you structure it. I could give you an example, like, most of my deals I've ever done have been a pref and some sort of the upside, right? 50 to 70% of the upside. I think early on I did deals where it was like an 8 pref and 80% of the upside to the investors. And what I've kind of realized is the better of a deal you find, the more you can kind of throttle that upside, right? Like if I find a rock star deal that's going to make really, really high returns, the investors are still going to make a ton if I give them a 7 pref and 30% of the upside, right? They might still make a 25 IRR at the end of the day, which they're really happy with, right? That's a really good return. But for me, going out and spending the time and finding that really good deal, I should, as the sponsor, any sponsor that's in this scenario should be rewarded for having that deal and should structure it accordingly. And so maybe you can earn 70% of the upside in that scenario. So, as long as the investors are still really making good money. Now you get into a scenario where my past couple of deals that I've done, I have a pool of investors that just want 8% return on their money, flat 8, that's it. And so that allows me and my partner on that deal to unlock 100% of the upside. All they wanted was a flat 8. So, I couldn't do that if I had to raise $4 million. I don't have $4 million at 8%, but I have $1 million to $2 million I could get at 8%. Yeah. So in that, 20, 30, 40, 50 unit range, I can go do a deal, raise 8% money. The cash flow takes care of all that. And then when we sell the deal, make $1 million, let's say, for example, that's split between me and my partner, and I didn't have to give any of the upside to the investors in that scenario. So how you structure the deal really, really does impact your bottom line, your balance sheet.
One of the metrics that we kind of keep a pretty close eye on in our underwriting is the return on capital raised. Yeah. And I think you're kind of getting at that point too. It's like, based on the amount of work I'm putting into this deal and the amount of LP money I'm raising and that sort of thing, like how much can I throttle up our returns on that? And how high can that return on capital raised be? Sure. So is that a metric that you guys look at?
I haven't looked into, but I can visualize that how you're saying, and I think that's a good one to follow for sure.
Yeah, we've
return on capital raised.
Our deal analyzer. I added a little thing on that, and we generally want to be at least 40%. But I mean, we'll see deals over 100, over 100% too. So
absolutely.
Yeah. And I just to again echo your goal of doubling your net worth every year. That is boss, man. That's badass, dude.
That's what we've been doing. I know it's going to get hard once you start getting into the decas, but that's the plan.
Dude, that's crazy. I mean, you're going to like in 12 years or 10 years. I mean, it's going to happen soon that you're going to be all of a sudden like, okay, how do I double this?
Yeah, exactly. But if I try, awesome. At least if I try, I fall short. We're still getting close. So, it's a fun thing that I like to do.
Well, and look, I mean, like just to state what's real, like not to blow your head up or anything, but you've obviously been very, very successful in a short period of time. 2016 was only 5 years ago. And was that the year that you did your first 12 unit?
I closed on it like early 2017, like January, February or something like that. Yeah.
So listeners, I mean, again, and we've been blessed enough to have a few other people like this on the show that just have killed it in a really relatively short period of time. Like, to me, it's possible to completely set yourself up for life within a 5-year period in this
100%,
in this industry. Yeah.
Yeah.
And
you absolutely can. I always tell people that like it is 100% possible to hit multi-million net worth within a 5-year period. And most of that comes within year 4 and 5, right? That, for me, I didn't hit the 7-figure mark until like year 3.5. I did my first 2 deals. I made $0 on for the whole entire first like year and a half. I made under $30,000 in the first like 18 months of being in the business. And I bought over 100 units. I just hadn't made any money though. I was struggling. I was living in my own apartments, house hacking, stuff like that. Like I had made nothing, right? Just barely enough to live and pay for my car and my food. But I was building sweat equity in deals and putting in the hard work to build a skill set that now can make me $1 million or more a year. Right. And that doesn't come in the first year or 2 or 3, a lot of times or 4. Right. But you take the time and you really, you're not just looking to make money in the beginning. You're looking to master a skill set, because a skill set can then make you money for the rest of your life. Right. But in the beginning, you've got to just put that time in to learn and to master what you're trying to do.
Yeah, that's key, guys. If you, again, back that up for a second, you're here to learn a skill set, to learn a business, to learn the terminology, the specialized knowledge, the conceptual stuff, everything that goes into being successful at this business. That's what you're here to do. You're not here just to do a one-off deal or, just to try to go from a duplex to, a fourplex or something like that. Like this is like heavy personal development space and professional development space. And that's what I love about it, quite frankly, is it's a space that it rewards you handsomely for a very stout effort at developing yourself and you're developing your business and getting past your limiting beliefs. Like, you spoke to that early on, and
you got to blow through those. I posted the other day, and I'm in the business when I'm teaching people, I'm in the business of helping people create actual wealth, helping people become multimillionaires, because, it's not about the unit count. That, it sounds cool to be on the GP, but GP doesn't make you money all the time, right? Like you have to really learn how to structure deals right and how to become a deal maker in order to do this. And one thing I posted the other day, which I think a lot of people resonated with, is I said, what part of the transaction do you bring to the table? Money, banks, deal analysis, kind of the admin or grunt work, management, or construction. And the more of those skills that you bring to the table, the more money you're going to make. If you bring one of them, you might make 1/7, right? But like you can raise money, you can find the deal, you can analyze it, you can asset manage it, and you can manage the renovations. The more of these skills that you bring to the table, the more in the end you're going to make, because the less partners you're going to need. And in this business, the more partners you bring in on each deal, the more the pie gets sliced up. Right. And that's the reality of the situation. So I know it's fun going and getting 12 people together and buying a deal, but like as you grow and as you, develop, the less you realize, the less partners you bring into each deal, the more you're going to make on each deal. So, I try and drill that in for people.
Yeah. It's key. It's really important. Like, and out of all the ones that you just went through, in my opinion, it's the deal and the capital are the 2 biggies, right? 100%. If you've got those 2, then you can find a boots on the ground partner in a market, for instance, correct, or an asset manager partner, or you can third party that, or you can in-house that, or, there's a number of different ways of going about that. Construction management, same thing. So the deal, the capital, and then you're rolling if you've got that. Now, as we've scaled up and 10x'd our unit count, more than that actually, but as we've done that, we've had to bring on institutional sources too. And it's I'll just say this, I actually want to do kind of a solo episode sometime soon on like why to like really be a great capital raiser and not have to use institutional sources of capital. It's obviously a necessary
control.
Yeah.
Control the deal when you can raise the money.
Yeah. Absolutely. And listen, these, like we're dealing with the pref equity source right now, and it's been an absolute, I won't state it as, I'll just say that it hasn't been
tough.
easy. Let's
It's
put it
tough.
that way. It hasn't
Dude,
been
I've
easy.
been through it too. I've worked with private equity and it's not easy, man. I
Yeah.
mean, they want, I mean, they're bringing a big check. So rightfully so, they're going to want a say in the matter.
Yeah.
But
Yep.
if you can go and bring that capital yourself, you're not going to have the headaches and the issues, and you get to set the structure,
Yeah. Yeah,
So
absolutely. Absolutely. Cool. So what does, what is the like short term look like for you in terms of deals and whatnot? What are you working on these right now?
yeah, I've got about 5 deals in the works. I would say at any time. So right now I've got a commercial refinance closing tomorrow. I've got a 28 unit closing next month, where me and a partner put $0 into a deal, and we're going to take 1.4 million and 1031 it from a 28 unit into a 52 unit. So that'll be my first
Nice.
1031. I'm excited about that. That
Nice.
was a deal we brought the 8% investors in on. So that was cool, and they're rolling over with us.
Cool.
I'm buying my first self-storage deal. Just buying it with a friend. It's 127 unit storage deal north of Austin. I'm building an airplane hangar, which is kind of a unique project. That's just north of Austin as well.
That's awesome.
Yeah, and I'm just hunting for the next apartment deal.
You love Austin, huh?
I do. It's a fun city.
Yeah.
A lot of nice
Yeah.
people, good food.
Yeah,
Cool
it sure
topography.
is. Yeah, we had a mastermind event there in the spring, and first time I'd ever been there, and it was it's top notch. I can see why you like it. It's are you having a hard time getting stuff to pencil in Austin? I guess it's kind of a Captain Obvious question, but
but it's tough.
Yeah.
I mean, it's like everything. I mean, you're in Salt Lake, right? You said. I mean, Salt Lake's also extremely difficult, low cap rate market. I would say Austin's similar. It's 4 caps. I mean, there's just so many people coming from outside buying into Austin that any type of 100+ unit apartment complex, it's almost impossible to find. I mean, they're out there, but they're really tough.
Yeah.
So I've only bought a 40 unit in the 2.5 years I've been in Austin. I bought a 40 unit and I just closed on an 18 unit in Austin, both within city limits. Other than that, everything I'm doing is kind of in the suburbs.
Perfect.
So,
Path of progress projects.
Yeah,
they'll
exactly.
do very well. Yeah. They'll do really well.
Exactly.
So, okay. So then what's like longer term look like for you? Real estate labs, I can tell is going to be huge for you. That's a niche product that's blue water right there. If you ask me, like that's awesome opportunity. How's that going to play into your big picture in the future, and what else is cooking?
Yeah, I'll say over the next, starting mainly next year, because we're finally launching it to public. I've been a lot of like back end stuff on that for a while, but I'm planning on going more full-time software company next year and going forward for the foreseeable future. So that's partially why I've scaled down like capital raising, stuff like that. So I'm doing more of my own deals and deals with friends and JV partners. And then, so I plan to still do 5 to 6 deals a year, more JV style, like I mentioned, and then the software is kind of at the forefront for me. So, I hope it takes off and people like it. And my goal is to just kind of gather feedback and see what people like at it. We're able to be real agile and flexible with it. So just grow organically into a product that the market likes and will use. So, and then, I've got a real estate community in that same company, Real Estate Lab. We got a community of about 150 investors that I have the pleasure of, educating and networking with every week. And that's been a lot of fun to see people. And I'd say the average age of our group is like 26, 27. So it's mostly people in their 20s. And so it's been really cool to see all these young people coming up and really like going from not having anything to buying their first couple deals. And so that's been really fun and rewarding for me.
I love how you've been a contribution to other people, like pretty much the whole way. You've been speaking, you sharing, teaching, educating, inspiring. And talk for a minute about your and I actually don't know very much about it, but I know you guys do some really badass mastermind stuff. You've got, is it Secret X? Is that
Secret X?
Yeah. That sounds
so
amazing.
It's like Yeah, it's like a side business that we don't. I don't know if it's a business because we don't make any money on it, but it is fun. And we started it like 3 or 4 years ago, and we held a mastermind in Cabo, and we had like 20 people come out, and we just had this idea: how do we go to all one or two different exotic countries a year, bring along a bunch of cool entrepreneurs, and just have a fun time networking, right? Instead of doing a mastermind in a conference room with a suit and tie on, how do we do it on a beach drinking margarita and networking with people, So we've done 4 so far. We've done Cabo, Costa Rica, Jamaica, Aruba, and the next one coming up, I can't tell you yet. It's a secret, but it's going to be overseas.
Cool.
And we're doing that mid next year. So
cool.
We'll have about 40 rooms. It'll be about 60 people, I think, to that one. It's on an island somewhere.
Wow.
And it's going to be pretty cool. So the cool thing is it's called Secret X, Secret Experience. Yeah. We don't tell people anything of what they're doing until they get there. So we start pushing it out on social media. We'll tell people the country, but we don't tell you like what resort, where we're going, what we're doing. And so you've pretty much got to sign up, secure a spot really quick before it fills up, sign up. And then we really tell you what airport to fly in. And then we have transportation arranged to pick you up. So nothing about what's about to happen. And then we just line up a really badass experience for you between us and our event planner. So
that's awesome.
It's all secret.
That sounds rowdy, to be honest. That's like the first word that comes to mind. Yeah.
Oh, it's rowdy.
Yeah. So, well, awesome, man. This has been a pleasure and, very inspiring to get to spend some time with you. Any last words of wisdom for listeners that are, younger in the space, looking to really break through maybe into their first deal? What would you have to say to those guys?
Yeah, I would say, ignore some of my advice from this podcast on your first deal. Do whatever it takes to get into your first deal and learn. Don't focus on the money. Don't focus on any of that. That's not what it's about. It's about learning. It's about getting in, and it's about really contributing to your team or however it's structured, and just gaining the most knowledge. Knowledge is power. Knowledge is confidence, and knowledge is going to give you the ability to go and do this thing over and over again. The last thing I'd say is commit to this business for a minimum of 3 years. I know people who it took 18 months to get into their first deal. It's a hot market. You're not just going to stumble across a slam dunk in your first week, right? That doesn't happen to most people. Really commit to doing this for the long term and realize that you're going to have to look at probably 50 to 100 deals before you buy your first one. So, it's a commitment, but it is well worth it if you make that commitment.
Yeah, both of those are really key. Like that, look at that first deal as like your education, right? And if you're making money off of it, that's a bonus. Like, obviously you don't want it to cost you money, but you want it. It's all about learning. And like David was talking about, the specialized knowledge and the confidence that comes along with that is everything. It's going to take you into your next deal. And at that point you've done the proverbial first deal, Michael Blanc law of the first deal. You've gotten over that hump, and you've got some track record at that point to go on. So I'm fully aligned with David's suggestion on that one. And the commitment thing, like you got to be all in on this. In my opinion, like this can't be a side hustle. It can't be like part of, in my opinion, the ones that the folks that I've seen like keep their foot in the single family space, for instance, and continued to, wholesale or flip single families and try to do this. It hasn't necessarily gone very well. I think I'm a believer in burning the ships on the beach and getting busy.
I agree, man. You gotta burn that bridge behind you. Give yourself no way out. Your only way out is forward. So
yeah. Well said. Well, on that, let's, this has been great. And I can't wait to catch back up with you in a year or so. And hopefully we'll see you at one of these events along the way in between now and then. But I'm stoked for Real Estate Lab. Can't wait to work with that and integrate that into our systems and processes. and stoked to see what you guys get done in the way of deals between now and the next time we talk and meet.
Likewise, man. Yeah, you as well. It's been cool to see what you've done since we met to now. So I only hope you keep every year double it, man. Keep doubling.
I love it. That's a new one for me, man. That's a paradigm shifter. Holy moly. I love it.
Keep it doubling.
Love it. All right. Well, listeners, thanks for listening. Again, if you're listening to the end of these episodes and like really absorbing everything that there is to absorb and taking notes, if you can, like, you're on your way. Like that bodes very, very well. And I think you're going to crush it. So listeners, just keep it up. Keep doing the good things that you're already doing. If you're involved and engaged in this sort of thing, you're well on your way. So on that, have a great week, and we'll catch you on the next one, everybody. Take care. Thanks, David.
Thanks, guys.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.